Good afternoon, CFO listeners, CFO Club listeners. This is Nicolaas van Wyk speaking. I'm the editor for CFO Club and also the CEO of the Chartered Institute of Business Accountants. Today, as my guest, I have Stephen Mwanje. He's the CFO at the National Security Fund of Uganda, similar to the South African Public Investment Corporation. We're very honored to have Stevens as our guest and sharing his insights into the role and development of the CFO, the modern CFO. Stevens is also a speaker at the upcoming 7th Annual CFO Africa Conference, organized by Marcus Evans, and of which the CFO Club is a media partner. We've been involved with the Marcus Evans event now for a couple of years, and this year we requested that we could interview some of the amazing speakers that I have lined up. So if you haven't heard yet about the 7th Annual CFO Africa Conference, you can go to the Marcus Evans website, marcusevans.com, and search for CFO Africa, and you'll find the agenda there. I must say I'm very impressed with the event that Marcus Evans has organized together with the CFO Club. And it's really a world-class speaker list covering a wide variety of industries, and it's also a lot of African speakers. I think for the first year there's quite an addition of African CFOs sharing their views. So please visit the upcoming CFO Africa event. It's going to be hosted in Sandton, and the CFO Club is a co-host partner with Marcus Evans. So my guest today is Stephen Mwanje. As I said, he's the CFO at the National Securities Fund. Hello, Stevens, and thank you for joining us.
Hello, Nicolaas. How are you? It's a pleasure being with you, especially being hosted by you. I'm very honored.
Thank you so much. So, Stevens, as we start, can you please just give us a brief background about your own career development? We have a lot of aspiring CFOs listening. They also want to know what's the ideal pathway, if there is such a thing, for developing into a CFO, and then also speak a little bit about your current role at the National Security Fund.
Well, Nicolaas, thank you very much. Career development, how I started, that would be a very long story, but I cut the long story short. I've always wanted to get into finance, but I also like other things to do with business development. But I thought that if I'm to become a better business executive, then I should know a little bit of finance or bits of it. So I started by enrolling for SCCA qualification, which I got. I can sincerely tell you that my first intention was not to become a CFO, but to become an accountant so that I can make better management decisions. But I grew into the profession. I did quite a bit of work. I worked in the bank before joining my current employer, where I headed business, I headed treasury, I headed finance. Then I joined my employer, came back, headed business, and now I'm back in finance as CFO. But what I can say that in all those roles, what is very clear that, and I think as we progress, we'll see in our discussion that being a CFO now, yes, you need the accounting qualification as a basis, but you need much more and many other skills for you to be able to be the effective CFO in the current century. Thank you, Nicolaas. So now, as to what I do, the National Social Security Fund takes care of retirement benefits for the private sector in Uganda. It was set up by government. The public sector have their own pension scheme run by government, but the independent companies, the companies which are private or publicly owned, they subscribe, their members or their employees are catered for their retirement through the National Social Security Fund. We collect 10% of their remuneration from their employer, and the members, the employees give us 5%. That's a total of 15%, which we invest. And we do the usual investments. We invest in fixed income, we invest in real estate, we invest in equities, and we give them a return at the end of the day. It is a provident fund for now, it's a provident fund that when the time comes, we give you a lump sum plus all the interest accrued. But also, a lot of work is now being done in the background to be able to provide so many other benefits other than being a provident fund. So, in my role as a CFO, I'm more involved in giving advice and value addition to the business rather than the traditional reporting, which is part of my work. But I find myself that I do more as a business executive rather than as an accountant. Thank you very much.
Thank you, Stevens, for that update. I don't think South Africa has something similar. I know we're talking into those lines. That we're currently discussing in South Africa national health insurance, and there has been talk about um, having like you said, a national provident fund. It's quite an interesting topic. We do have the PIC, which has trillions of rand under management, I think, which is also very well run and involved with infrastructure, but that's more for state pension fund contributors. So it's interesting concept, the National Security Fund. Uh, Explain it more to our South African listeners. When did it start, and what was the intention with it, and what is the feedback from employers? And maybe it is something that we in South Africa should also consider.
Okay, start was interesting because the government used to own a lot of public corporations. Everything almost was owned, every big corporation was owned by government. Anything to do manufacturing, farmers, cooperatives, production. But then in the 1980s, the government decided to divest all these corporations. So here it had people who had been like public servants going to the private sector. And now they are no longer going to have access to retirement benefits from government. So government set up the National Social Security Fund in 1985 to cater for this. And at that time, say any company, the private company which employs 5 or more persons had to subscribe. Like I said, that total subscription is 15%, 10% from the employer, 5% from the employee, that related to your total monthly remuneration, cash remuneration. So it has grown by leaps and bounds for all intents and purposes, because it started from zero. Now we have total assets of around 5.2 billion US dollars. I don't know how much that is in rands. In our economy, that's quite big. In your economy, it's not so big. So in our economy, it's actually the biggest financial institution, because if you look at it, Standard Bank, which is an economy here, is called Stanbic. It has got around total assets of around 2 billion US dollars. And ours is around $5 billion. So that is the comparison. And that's the biggest bank in the market. Now, how do employers and employees take it? At first, it was looked at as a tax, because if I tell you that you are going to contribute until you are 55 years old, is when you can first access this money, except if you are mental or physically incapacitated, or if you die and your survivors come and get it. So it was looked at as a tax, as something like people didn't really pay much attention to it. Like that money is going to be collected and stay there for 20 years without me touching it. But eventually we've been sensitizing, and people are seeing value, because we do work a lot to make sure that this money is protected from inflation. By the time you get your lump sum, it's quite a substantial piece that can help you accentuate or build up on all those other assets that we are putting up for your retirement. It's a really a good package. If you really look at it, it's a good concept. Thank you.
So thank you, Stevens. Yeah, it's quite interesting. I was wondering, there's a clear connection, obviously, with how your economy was previously set up. So, as I understand it, it was more like publicly owned. I don't know whether the nationalization word is appropriate, but then in 1985 there was a change, and where previously the state employee had a pension, he now didn't. And I know in South Africa there's a lot of state-owned entities and publicly run entities. And with our current economic difficulties, there's a lot of talk about the private sector getting more involved. So um, I, that's definitely something. If something were to be privatized, then I can see why a national security fund might be necessary. So it's also very impressive the amount of money that you can allocate or have under management. Um, and you previously mentioned your role as CPA, and you're a member of the CPA institution in Uganda, and we were talking about the differing perspectives or differing skill sets required once you qualify as a CPA versus when you get appointed to the CFO at the National Security Fund. So I'm sure that must be like a period of, let's say, like 15 years or even more. Now,
Yes.
as you qualified now as a CPA, there's a lot of skill sets that you need to add on before somebody will appoint you as a CFO. And I was
Yes.
just going through your LinkedIn profile. I can really recommend it to the listeners. It's Stephen Mwanje. You'll find him on LinkedIn, and I can see here there's so much that he added to his qualifications by first qualifying as an ACCA and then doing postgraduate diploma in business. And then there's an MBA from Harriet Watt University, executive education from Strathmore Business School, and then executive education, becoming a strategic partner from the Wharton School. And there's also our very own Gibbs listed within his range, and I can very impressive educational skill sets. So that does give me the impression that there's a big difference between being a CPA with the ACCA and then later on ending up and doing a lot of these courses to become a CFO. Can you just elaborate on this gap and the skill sets that's required of the modern CFO, Stevens?
Thank you, Nicolaas, again. I think you just nailed the nail on the head. Being a CFO now is more than just being a person number crunching, expected to report as at and say as at end of month, then you sit back and let the others do their job. Now, when you're a CFO, you are supposed to be a person who is going to add value to the business, a person who is supposed to be an advisor to the business, a person who is supposed to partner with the business and give them solutions. The reporting that we do these days is no longer retrospective. We are more interested in prospective reporting. Because if you tell me as at, then what? Because that is in the past. Now you should be telling me, help in the business to project what is going to happen. So that, because it's a very fast moving world, the business is no longer interested in what happened yesterday. Yesterday, history is good, gives you a reference point, but what is happening tomorrow is different from what is happening next week and what's happening next month. So when it comes to the new skill set of the CFO, yes, you need that accounting qualification as a basis, but you need to have other skills. Even if you don't have them personally, you have to have them in your team. You have to have people who can do data analysis. This is very, very important now because every decision that you have to make for a business has to be data driven. You have to make sure that you get your people engaged into value adding activities. It's no longer tenable for you to have people doing manual reconciliations, manual payments in accounts payable, manual calculations of revenue. All those mundane tasks have to be automated so that you get these people who are qualified accountants, who spent a lot of time becoming professionals wherever they are, so they can get engaged in activities that can add value to the business. And believe you me, when you start doing that, you'll see a very, very big difference. You have to be looking at your processes. What are the processes that you are doing in the business? Are these processes adding value? You have to look to be able to manage stakeholders, because at the finance department, if you notice, in any organization, everything, whichever key decision is made by the organization will pass through the finance department, because every key decision that is made by an organization has a value attached to it. And because of the central location of the finance department in the organization. You are the fulcrum. You are in a unique position where you see everything as a CFO. Sometimes you even have a wider picture than the CEO, and you should be able to utilize that position to give more value to the organization. I hope I've answered your question appropriately.
Yeah, there's quite a good and in depth. I can see there's a lot of experience behind that answer, and thank you for that. As in the CFO Club, if the listeners want to opt over there, it's cfoclub.co.za. We developed a 34 competencies required of the modern CFO. And as Stevens has highlighted here, it starts with the steward role, the operator role, the catalyst role, and then the strategist role. And it's all those four skill sets. And what's interesting is that we recently, with our sister organization, the CFO Alliance, made a presentation to the European Union to see if we could standardize the skill sets required of the modern CFO and maybe issue it as a European guideline. And that is quite an exciting project. It's part of the CFO certification project that's now being considered by a working committee of the European Union. It's part of their quality councils are looking into it because as I was discussing with Stevens, there's so many qualifications that Stevens have added to his CPA designation that maybe there should be, once you've obtained all of those, there should possibly be a CFO designation to indicate not only your new skill sets that you found. And I think that is something that we as the CFO community should really consider. So coming to the event, our CFO Africa event that we annually host with Marcus Evans, your topic of discussion, Stevens, what is that focusing on?
It is focusing on transformation of the finance function. Really, it's basically a mini topic of the last questions that you asked me, because like we all know that, and like I said, I might be repeating myself, is that our role is becoming more dynamic. I think that's why people are even thinking about turning into chief value officer instead of chief financial officer, because now we are focusing as accountants, as senior finance persons. We should be focusing more on giving value to the organization rather than reporting. And that is a whole set of activities or set of changes that have to be applied to the finance function, the finance department, accounting function in an organization if you are to achieve that. So that's my topic.
And I see our conference is hosted from the 10th of July to the 12th of July, 2024, and it's at the NH Johannesburg Sandton Hotel. So those of the listeners that's interested in attending, it's over 2 days with a multitude of speakers of the quality of Stevens. So if you want to meet a network, I think with the Africa Free Trade Agreement that has been signed recently and the opening up of African economies, it is a wonderful opportunity for CFOs wanting to expand and work in Africa to be at this conference and the event. I will also be presenting about this whole European development, about the CFO certification, and I'm looking forward to listening to Stevens discussing the transformation. Stevens, in your role as the from the national skills from the fund, my question would be, given the fact that we have to address climate change, and I'm sure you're aware of all those new standards from the ISSB,
yes.
Has there been some pressure on the fund to start looking into and be more prescriptive about the industries that it wants to invest in? And the reason I'm asking, and it's a bit of a contentious question, it's something I've been struggling with to understand myself. I usually, when I present to CFOs, I ask them the question: how big is the African contribution to GDP? And then, if you look at it, it's like less than 3% of world GDP comes from Africa, and you can break that number down further to how much does Africa contribute to global CO2 levels, and that is in even less than 1.3%. So of all the CO2 in the world being generated, the whole of Africa generates less than 1.3%. But Africa is a continent with the most unemployment, and we also have the youngest population. So I'm also always very, uh, what's the word?
Youngest
Afraid,
population.
yeah, that we will make decisions on investments that will hamper our growth. We have a lot of coal resources, we have a lot of natural resources. Um, Africa only has one nuclear power plant here in Cape Town where I stay, which is very strange to me that Africa as a whole continent only has one. But if I look at South Korea, they've got 26, and India more than 40, China I think more than 60, the US more than 150, and France are planning to add to their already existing 56 another 10 nuclear power plants, and economies are driven by power. And in this whole discussion about climate, how can we ensure that Africa is safe when it comes to our own energy generation? And do you think, and maybe an unfair question, but it's a bit rhetorical maybe, that Uganda or your fund should not maybe invest in its own nuclear power plant, seeing that the whole world is choosing that power source? Over to you, Stevens.
That question is like being between a rock and a hard place. Of course, the key thing is that every responsible organization now is concerned about the sustainability of the environment in which we live and make sure that we can leave it safe for the future generation and improve on it, and so that we can try to claw back on the issues that we have been having related to uh, climate change. Yeah? But at the same time, you also have to remember that Africa is still developing, and we need, like you've talked about those statistics, and unlike our counterparts in the Western world, they've done most of their development. So they are in that phase where it is much easier for them to lead on environmental protection and pass regulation for environment protection. But unfortunately, some of that regulation curtails the development of Africa. But that said, every responsible organization should be having activities that are help to decarbonize the damage that has been done to the environment. So we should put into practice those activities that will help protect the environment. In Africa, we do not have much luxury in saying that I can pick that all suppliers or stakeholders that people I deal with have to be environment sensitive. They're applying all the key aspects of ESG. Unfortunately, we do not have that luxury. You cannot say that, for example, all the food that is grown and brought in the market should not involve child labor, when actually in Africa, families go out with the whole family goes out to dig with kids from around 6, 7 years. They dig as a family. They don't dig with those kids because they are employing them as labor. So that's why I'm saying we're in kind of a catch-22 situation. So the key thing that we do the sensible things, the things that should help to take us towards that journey. It's going to be a long and protracted journey. It's not something that you are going to hop on like a bus and say, let's drive to this destination and we'll be there in 1 hour. So you have to play a sensible game, and that's what we should do in Africa. That's my opinion.
No, I agree with you there. I recently read a research paper by Joan, which I'll be sharing with you just after this conversation. And she analyzes the economic development of China since 1979, and then the different phases it went through until growing to today. second largest economy. And then she analyzes, just like you now said, there's certain realities that must be accepted and certain contexts that apply. And you can't just impose a current Western standard and then expect a specific economy to grow. It has to have its own realities that has to be fixed. So now I'm totally there with you, and I think for me, if I could give you some recommendation, then please consider a nuclear power plant in Uganda. And I see there's a lot of interesting modular, small modular reactors being built, and I think if you could have it there in Uganda, the economic growth and prosperity that will generate will be huge. And you will have a lot of South African companies wanting to buy energy from Uganda. Since we don't seem to want to develop our own nuclear power plant, I think we need to partner with other African countries to start building it. Then it's been an interesting discussion, Stephen. So I'm looking forward to meeting you in person at our CFO Africa Conference that we're hosting now in July. And I'm very interested in your topic, especially from the company and the perspective that you're coming from. So once again, thank you very much for this interesting discussion, and also for you being open and frank with your opinions. I think that always resonates with the audience. They're looking for authentic CFOs. So thank you very much, Stevens.
Thank you, Nicolaas. It's been a pleasure, and I'm looking forward to meet you and all the other CFOs. I know we are going to have a very, very good conference. Perfect. Thank you very much.
Thank you so much.
You have done the work. You have earned the title. Now get the designation. Cyber's most sought after CFO SA designation gives you the credibility and objective recognition of the 34 competencies that you have mastered on your route to becoming a CFO. Cyber's most sought after CFO designation gave me the credibility and objective recognition of the 34 competencies that I have mastered on my route, grounded in an internationally recognized competency framework, requiring knowledge and experience in strategy, operations, and finance. Being part of the CFO Club Africa opens you up to a network of CFOs. The CFO SA designation is relevant to you if you have experience in performing various finance executive functions within the finance department. Being part of this elite group of modern CFOs helps you grow alongside your peers in a valuable source of advice on leadership challenges. If you are looking to demonstrate your leadership abilities to the future employers, then this designation is for you. Apply now. It's time to step it up. Become a finance leader and get recognized as a CFO. This is your Cyber.